Hey everyone, welcome back to Corporate Decoder. Today, DSNY Media Technologies Incorporated, ticker DSNY, just filed an 8K announcing a new CEO, and I'm seeing a couple of shifts that matter. Quick note, this is not financial advice, just my take on public filings for educational purposes. The takeaway here is a founder stepping back into a key leadership role with significant new stock grants, and we need to see if he can turn things around. So what we have here is what is called a Form 8. Think of this as a company's way of telling the public that something really important just happened. It is like a public announcement for major events. This filing is from DSNY Media Technologies Incorporated, a company we've looked at before. It's a tech company in the software application space. The big news here is that on the 15th of July of 2026, Sharath Cherian officially became the new Chief Executive Officer and President of DSNY Media Technologies Incorporated. This is a significant change in leadership. Prior to this, Hae-myung Cho was the interim CEO, but now Hes stepping back into his role as chairman of the board. This means the company is moving from temporary leadership to a permanent CEO. Now, who is Sharath Cherian? The filing tells us Hes 46 years old, and Hes not exactly new to the company. Hes been working as a strategic consultant since February of 2025, helping the board and management with their overall strategy and business plans. So he has some inside knowledge of the company's current situation. But here is where his experience really stands out. From April of 2020 to March of 2024, Mr. Cherian was the Chief Executive Officer of HipHopDX. This is a digital music media platform that Warner Music Group acquired. This means he has experience leading a significant digital media business, especially in the music space, which could be relevant for DSNY Media Technologies. And even before that, he founded Cherry Media, which owned HipHopDX, Roughstock, and BattleRap.com. He started this company way back in 1999 and led its growth until it was sold to Warner Music Group in 2020. This shows a long history of entrepreneurship and building digital media companies from the ground up for a company like DSNY Media Technologies. Bringing in someone with this kind of founding and leadership experience is generally a positive sign, especially if they are looking to reignite growth or explore new opportunities. So with his appointment as CEO, DSNY Media Technologies Incorporated signed an employment agreement with Mr. Cherian. This agreement sets the terms for his new role. Under this agreement, Mr. Cherian will receive a base salary of $240,000 per year. On top of that, he's eligible for an annual performance bonus. The target for this bonus is 40% of his base salary, meaning he could earn an extra $96,000 if he and the company hit their goals. This is a pretty standard structure, tying some of his compensation to performance. What's interesting is how the bonus will be paid. 40% will be in cash, which is straightforward, but 60% will be in equity, like stock awards or restricted stock units. This shows the company wants him to have a stake in the company's future success, aligning his interests with those of shareholders. But the real eye-catcher in terms of equity is this. Mr. Cherian is getting an initial grant of options to buy almost 500,000 shares of the company's stock. These options are spread out with different exercise prices. The lowest is $0.623, the next is $0.7, and the highest is $0.8. The current stock price is around $0.56 according to the provided context. This means that for these options to be profitable, the stock price needs to go up significantly past these exercise prices. For example, the options at $0.8 would only be valuable if the stock price rises above that. This is a substantial incentive for him to drive the stock price higher. The agreement also includes standard clauses you'd expect, covering things like employee benefits, keeping company information confidential, ownership of intellectual property, and rules about not poaching employees or customers if he ever leaves. This description of the employment agreement is just a summary. The full detailed agreement is attached as an exhibit to this filing, and it's worth looking at if you want all the nitty-gritty details. It's also noted that Mr. Cherian's appointment is based solely on this employment agreement and the board's approval. There are no other secret deals or understandings involved in his hiring. Now, moving on to another important piece of information. Regulation FD stands for Regulation Fair Disclosure. This is a rule designed to prevent companies from giving unfair advantages to certain investors by releasing important information selectively. On the 14th of July, just before the official filing, the company put out a press release about Mr. Cherian's appointment. This press release is attached to the filing, but importantly, it's being furnished, not filed. This means it is for public information, but doesn't carry the same legal weight as the official 8K filing itself. It's a common way for companies to get news out quickly. Finally, we get to the exhibits. This section lists all the supporting documents that are part of this filing. Here we see Exhibit 10.1, which is the actual employment agreement between DSNY Media Technologies Incorporated and Sharath Cherian. This is the primary document outlining the terms of his new role. And Exhibit 99.1 is that news release we just talked about, dated the 14th of July, announcing the new CEO. Exhibit 104 is the interactive data file, which is standard for SEC filings now, making the information more machine readable. Looking at this filing, the core story is the change in leadership. Sharath Cherian, with a background of founding and leading digital media companies, is stepping in as CEO. The compensation package, especially the stock options with exercise prices above the current market price, signals a strong expectation for significant stock price appreciation. This is a critical bet on his ability to turn the company around. The risks here are clear. Destiny Media Technologies Incorporated has a market cap of only about $7 million, with a stock price trading below some of the higher exercise prices on Mr. Cherian's options. This suggests the company faces challenges. He has a track record of success, but replicating that here will depend on many factors, including the company's underlying business, market conditions, and his strategic execution. A comparable situation might be companies that bring in experienced executives to rescue struggling businesses. For example, when a company like Rite Aid has brought in new leadership to try and navigate financial difficulties, the path to recovery is often long and uncertain, with significant stock price swings. The opportunity is that if Mr. Cherian can leverage his experience to drive innovation and growth, the stock price could indeed move past those options strike prices, benefiting both management and shareholders. The question is whether he can achieve that turnaround. My biggest concern is the current stock price relative to the CEO's equity incentives. While it is good to align interests, these higher strike prices mean he needs to see a substantial increase in value for his options to be worth anything. This puts a lot of pressure on him and the company to perform. What I am actually looking for is how he plans to achieve that growth and if he can actually execute on his strategy. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.